morning. In the past few classes, we have discussed income from other sources, and we have also gone through some of the uh, incomes that are specifically taxable under the head other sources. So, one more income which is specifically taxable under the head other sources. Important component of this chapter is casual income. So casual income is in the form of prize money earned from lottery, TV shows, racing events, lucky draw, betting, gambling. So all this constitutes casual income. So if you have to define what exactly is casual income may be defined as an income which is earned by chance. Any income earned by chance is definitely a casual income. So as far as casual income is concerned, it is earned by luck or by chance. It is not recurring in nature also. So casual incomes are also taxable under the other sources. Now, one of the important component that you have to learn in this chapter is to do grossing and to apply the concept of TDS. So, first of all, you should know what exactly you mean by grossing, and when do you do grossing, and when you should not do the grossing. So, this is extremely important for you to understand in this chapter. So, this is something which we have already gone through, but let me quickly do a recap. So, as per the rules, for certain incomes, the government of India says TDS is required. TDS stands for tax deducted at source. So when you say tax deducted at source, what it means is the source at which the income is getting generated, the provider of such income is liable to deduct tax from the income of the person who is earning it and then remit the tax with income tax department. And once the tax is remitted on behalf of the person who has earned the income, TDS certificate is given by the income tax department, and the same certificate is given to the person who has earned that income. What is the logic behind TDS? I can do it by myself. Let's say I'm working in St. Joseph's College. St. Joseph's College is deducting tax from my salary income, and on my behalf, it is depositing the tax with Government of India, Income Tax Department, which is called TDS, tax deducted at source. I can do it by myself. Why is the college doing it for me? Because the rule says that college should do it. For certain types of incomes, it is the person who is giving the income who should do the TDS and not the person who is receiving it. The objective behind and the logic behind this is very simple. If you insist the tax payer to do, the person who has earned the income to do it, there are high possibility that he may not do it at all. For example, let's say I may not pay tax at all on certain incomes for a simple reason that nobody wants to do it. First of all, nobody wants to disclose the income, right? Let's say I go to Christ University to do a quiz show, and Christ University pays me 25,000 as my fees. Now, after getting that 25,000, I may not include that in my total income. I might not disclose it at all because I don't want to pay tax. So what has happened is that 25,000 income what I've earned has gone unnoticed. I have not revealed it also. Neither I have paid any tax on that also. So in this way, Government of India is losing crores of rupees of tax. So in order to avoid such transaction, what the government insists is to go for the rule of TDS, which says that in this example what I've given you now, income earned from conducting quiz from Christ University. Christ University is responsible for deducting this tax from my that 25,000 rupees income what I've earned. So Christ University should deduct 10,000 TDS, 10,000, 25,000 into 10% comes to 2,500. Deposit that TDS with Government of India. So I'll get only net income. So 25,000 minus 2,500 TDS, I'll get only 22,500. So the income what I've got is called net income. Net income means after deducting TDS, I was given the income. So what happens here is while calculating income from other sources, if the TDS is already deducted, we should do something called as grossing. What is grossing? Grossing is a process of adding the TDS back to the original income, and this is how we do it by using this formula. Here, as you can see in this formula, we should know TDS rate. So what is the TDS rate? So the TDS rate for different income varies, right? So you should learn and remember the concept of grossing and also the rate of TDS. So these are the incomes for which TDS gets applied, and these are the rate of TDS. So TDS gets applied only if the amount of income surpasses certain limit in some transactions. For example, if you can see here, in case of casual income, especially if the winning is from horse race, only if the amount exceeds 2,500, the government will, the TDS of 30% will be applicable, right? But for other incomes, it is 10,000. For other income, for other casual incomes, it is 10,000. So even though it is not mentioned here, but you should remember that for other incomes, if the receipt exceeds, let me quickly cross check. Yeah, so if the receipt exceeds 1,000, so here it is in case of horse race, it is 5,000. For all other casual incomes, it is rupees 10,000. Means let's say I go to KBC, Kaun Banega Crorepati, and I answer the first question, which is for 10,000, and again immediately I lose. So I lose, unfortunately. So what happens here? I earn only 10,000. So will the organizers deduct TDS? The answer is if you have earned up to 10,000, TDS will not be done. Only if the amount exceeds 10,000, you should they will do the TDS and give you the net amount. So for casual incomes, TDS is applicable only if the income exceeds 10,000. But in case of horse racing, it is 5,000. So likewise, interest on bank deposit, if you have kept money in the fixed deposit, if your interest has exceeded 40,000 during the financial year, then the bank will deduct 10% TDS and give you the net income. For insurance commission, the amount of TDS is 20,000 and the rate of TDS is 10%. For interest on securities, something which we have already done, it is 10%. For securities, there is no limit as such. Whatever income you have earned on that, TDS will be applied. So we have already done a chart on this. So you have to see the chart depending on when to do TDS and when not to do TDS. So the concept of TDS is applicable, and it is applicable for these four incomes in this chapter. So remember the concept of TDS. And the other incomes we have already gone through in the preceding classes. So let's do an illustration. I want you to refer your handout or the study material of this chapter and specifically see in that the first illustration. So we have to work out solution for the first illustration. So before we could work out the solution, remember deductions allowed while computing other sources, and this is mentioned there in your handout also. So every head of income, what you have learned, what you have studied, has certain permissible deductions. So when we start with income from salary, which is your first head of income, so from gross salary, what are the permissible deductions? The permissible deductions are mentioned under section 60. So you have three permissible deductions. One, standard deduction. Second, entertainment allowance of government employees. Third, professional tax. Now you move on to the next head of income, which is income from house property. There also, from the gross annual value, certain deductions are permitted, which are specified under section 24, which includes two. One, standard deduction of 30% of the GAV, sorry, of the NAV. Deduction is on the NAV, not on the GAV. Net asset, net annual value. Net asset value is in mutual funds. So net annual value. So on net annual value under section 24, deductions are permitted. First one is 30% standard deduction. The second one is interest on loan. Next comes your third head of income, which is profits and gains from business and profession. So what are the deductions? So these deductions are mentioned under section, in fact, from 30 to 44D, all the deductions are mentioned, admissible and inadmissible, all the items are mentioned. Next comes your capital gains. What are the deductions from capital gains? So section 54, 54, B54, D54, EC54F, these are the deductions. Likewise, what are the deductions that are permissible while computing income from other sources? So here the logic is simple. The rule says, if you have any incidental expenses pertaining to a specific income under the head other sources, it is allowed. It is allowed. But certain conditions are there. Condition number one, it should not be a personal expense. For your better understanding, it is there in your study note material, so you can refer it. I'm just trying to in points here, that's it, not in detail. So first one, it should not be a personal expense. By personal expense, let's say I'm writing a book, and in order to write this book, I have certain expenses. I've received royalty from writing books, but in order to earn this royalty, I have certain expense. First one is I have made phone calls. So out of the total phone calls what I have made, certain phone calls I have made to the publisher, but the remaining phone calls are my personal calls. So the total telephone expenses is 10,000, out of which only 1,000 is pertaining to the calls made to the publisher relating to the book publication. But what I have done is I have claimed the entire 10,000 as an expense. So what will happen in this case? Only 1,000 expense pertaining to phone calls made to the publisher in relation to publishing of the book is permitted from the royalty. So the expense should not be personal. Likewise, it should not be a capital expenditure. Same example, let's take for writing book. I have bought a laptop. And nowadays, nobody writes it; everybody types it in the laptop. So, is laptop expense allowed? Can I deduct laptop expense from my royalty income? What I've earned from the book? The answer is no, because laptop is a capital expenditure, is an asset which I can use it for so many years. But can I claim depreciation on laptop? You can, but you can't claim capital expenditure, right? So that's the third important rule. Next is expenses incurred expenses incurred, exempted income and casual incomes are not allowed. So any expense pertaining to exempted income is not allowed, because when the income itself is not taxable, why are you claiming expense? Simple logic. Likewise, any expense incurred in earning casual incomes are also specifically disallowed by the income tax department. So these are some of the important rules pertaining to expenses. It is detailedly mentioned in your handout, but I've just extracted them and I have written it down here. The other rules are also applicable as same, which we also follow in profit and gains from business and profession. So any expense which is unreasonable or which is made by cash exceeding 20,000, so that is also not allowed. So this is the common thing which we also follow in income from other sources. Another important point which you have to remember is pertaining to casual incomes. Pertaining to casual incomes, let's check what are the rules. I've already mentioned that for casual incomes, any expenses not allowed, right? So if you remember these points, I think that would be uh, sufficient. So these are the rules pertaining to expenses. Now let's quickly go through the first question. So this is our first question in the handout. So quickly go through this. So let's record transactions one by one. So your job here is to calculate income from other sources. So the first transaction here is dividend on shares of an Indian company. So what are the rules pertaining to dividend? So as you are aware, dividend received from an Indian company is exempt. Dividend received from a foreign company is fully taxable. Likewise, dividend from a cooperative society is also fully taxable. Section 10 subsection 34, dividend received from an Indian company is exempt. You have directors sitting fee. As I have already explained this to you in the preceding classes, director is not an employee of the organization, and hence his remuneration is taxable under the head other sources. You have income from letting on hire building and machinery. So this is the income which is being generated from letting building and machinery on hire. So here, as I've already explained this to you in the preceding sessions, that if the assessee is into business of letting building or any other assets on hire, then it will be taxable under the head profit and gains from business and profession. But if the assessee is not into the business of letting things on hire, then it will be taxable under the head other sources. So first we check whether this can be taxed under the head profit and gains from business and profession. If it is not fitting there, if it is not applicable, then we bring down this transaction to other sources. So what is the income he has earned from this? 60,000. But pertaining to this income, there are certain incidental expenses that needs to be. Expenses pertaining to this income. What are the expenses pertaining to this income needs to be? First expense pertaining to this income is depreciation. So since he's letting the machinery as well as building, both are depreciating assets. So how much is the amount? That's deducted 8,500. Similarly, we also have other expenses which includes gifts that deducted. Yes, 4,500. To protect these assets, he has also bought insurance, fire insurance. Also an expense, and insurance premium comes to 5. These are the expenses what he has incurred to earn the income of 60,000. So from 60,000, let's deduct all this. 8,500 minus 4,500 minus 500. So 46,500 is there. Next, dividend from foreign company received in New York. So dividend from foreign company is fully taxed. Now you might be wondering, this foreign company is in New York and the income is also earned in New York. So income earned in India, received in India. So you have to quickly recall your second chapter of the first semester, residential status and incidence of tax. Section 6 and Section 5. Section 5 talks about scope of income. What is a foreign income? What is an Indian income? And Section 6 talks about different types of residential status. So foreign income is an income which is earned outside India and received also outside India. So foreign income, is it taxable because it is earned and received outside India? The answer is yes. For ordinary resident, foreign income is also taxable, and this guy is an ordinary resident. Even if this was not mentioned also, you would have assumed him as an ordinary resident itself. So foreign income is taxable for all ordinary resident. It is not taxable only for not ordinary resident and non-resident. Okay, so anyways, dividend from foreign company shares is taxable. Next comes your income from subletting. So what is the concept of subletting? I've already explained this to you. Subletting is a concept wherein you are staying in a rented house, but you have given part of that rented house to somebody else on rent and you're earning the income from rent. So the rent what you're giving to your landlord, the original owner of the house, is taxable under the head house property. But the rent what you're collecting by subletting a part of your house, rented house, to somebody else, is taxable under the head other sources. The reason is, in order to tax any income under the head house property, it is compulsory that the owner should be the assessee should be owner of the property. But here you're staying in a rented house, you're giving the rented house to somebody else to stay. So you're not the owner of the house property, and therefore the income what you're getting in the form of subletting is taxable under the head other sources. So let's first write the income. First note down the income, right? So income from subletting. How much income have you earned from subletting? So he has taken a house on rent for 10,000 per month. So this is the rent what he is paying to the original owner of the house. And in this house, what he has done, 40% of the house he has given it to a tenant. For how much? 5,000 per month. So this is his rental income, 5,000 per month. This is what he is earning from subletting. 5,000 into 12 months. Write down the income from subletting. So this comes to 60. Now, what are the expenses pertaining to this income? What are the expenses he has incurred? So less expenses pertaining to this income. Let's note down the expenses. So question. So some of the expenses what he has paid is, he has paid municipal tax for the whole property, for the entire property. Second, he has also borne the expenses pertaining to repairs of the entire property as per the agreement. So just imagine I have taken a house on rent, okay, for which I am paying 10,000. Now I feel the house is too big, so I have given the house to you to stay. What proportion of the house? Have I given you the entire house to stay? No, only 40% of the house I have given you to stay. Okay, so I, as the original tenant of this house, I am paying 10,000 to my landlord, who's the owner of this house, and he has said, boss, you have to only bear all the expenses. Municipal tax you should only pay, repairs also you should only pay. This is the agreement between me and my landlord. So you are staying in my house, and I've given 40% of my house to you to stay on rent, from which I am earning an income of 60,000. So from this, what are my expenses? This is my income, what I've earned from you. So what are my expenses? My expenses is that I am also paying rent. This is not my own house. I am also paying rent. So rent paid to original owner or the landlord. How much rent I have paid to the original owner or the landlord. That's my expense. And important to note that all the expenses are apportioned in the percentage of let out. So what is the proportion of the house let out? In that proportion, all the expenses will be calculated. What's the second expense? Is I'm agreed to pay municipal tax also. How much? Rupees 5,000 is the municipal tax what I have paid per annum into 40%. Next, we also have expenses. So let's check out the repairs, how much it is. Municipal tax is 2,000 and repairs is 5,000. So after deducting all the expenses, this is the net income from subletting. So whenever we are doing income from subletting, first thing you have to note down is what is the income being generated from subletting. So from this income, you have to deduct all the expenses in the proportion of subletting. So what is the proportion of subletting? 40%. But in case if you have given the entire house for subletting, then you don't have to apply this 40% or the proportion. Here only 40% of the house is given for subletting. So all the expenses will be allowed in the proportion of subletting, which is 40%. In case if you have given the entire house for subletting, then don't apply this proportion. As simple as that. Next we have, let's check what we have next. Royalty income. So royalty, as usual, first write down what is the income he has earned from royalty. As per the question, he has earned 75,000 as royalty income. From this, incidental expenses, all the expenses which he has incurred in earning the royalty income. So what are the expenses he has incurred in earning the royalty expense? Let's deduct. the expense. So first expense is that he has given 25,000 salary to assistant. So assistant will help him in writing the book. So salary to assistant, write down the expense. Salary to assistant. 1,000 is what he has given as salary to assistant. 20,000 are some other incidental expenses. Net income will be you have income from agriculture land situated in India. So not situated in India, situated in Indonesia. So if the agriculture land is outside India, then the income is taxable under the head. If the agriculture land is in India, then it becomes an exempted income. Honorarium received for writing articles in Indian Express. The income earned from this is 4,000. Received 35,000 lottery winning. So this is the casual income. And it says net. It says net here, which means the tax is already deducted. Tax is already deducted. So we have to add back the tax. So in order to add back the tax, we should use this grossing formula. Grossing of free income formula. What is the TDS rate? The TDS rate for casual incomes is 30%. So let's substitute. Amount of income is 35,000. 100 divided by 100 minus TDS rate. So 100 minus 30. This will give you from launch. Next you have gift. From whom? His brother gave him an imported gift. So gift from brother. So brother is a relative. So not relatives are not taxable. Income from agriculture land in Haryana. So Haryana is obviously in India, and income from agriculture in India is exempt, as you are aware. Subsection 1, agriculture income from India is exempt. So we have covered all the transactions. So let's do the totaling now quickly. Constitutes taxable income from totaling needs to be done now. 2,500 so 2,14,000 So if you have any doubts, any questions, uh, go ahead and get it clarified. Any questions?
Sir,
Go on.
so what is the difference between the income from letting on a year of building and machinery and income from subletting? Could you differentiate between the two?
What is the difference between, can you repeat again?
Difference between income from letting on a year of building and machinery
Yeah.
and subletting of the property, sir.
Okay, okay, okay.
Yes.
So his question is, what's the difference between income from letting on hire building and machinery, and what is the difference between income from subletting?
Yes, sir.
Now the difference here is, in case of income from letting on hire building and machinery, who's the owner of building and machinery? You're the owner, they are your property, they are your
Yes.
assets. In
Assets.
income from subletting, you're not the owner of the property. You yourself is a tenant. You're paying 10,000 rent to your owner. You're not the owner of this property. So since you're not the owner of the property, but still you have given the property for use to somebody else and collecting rent. So it gets taxable under the head other sources. But if you were to be owner of this house, in this case there is already somebody owner to whom you're paying 10,000. This 10,000 what your owner is receiving is taxable under the head income from house property. So what's the difference between income from house property and income from subletting? That's the question that you should have asked. So the answer is, in case of income from house property, the assessee should be the owner, important condition. But in case of income from subletting, the assessee is not the owner of the property. Since the assessee is not the owner of the property, such income is called subletting income, which is taxable under the head other sources. Now, in case if you're doing business of giving machinery and building on hire, if that is your regular business, then that will not come here. That will come under the head profit and gains from business and profession. So that's important, right? If you're into that business itself, then we can't take this here. So since here it is given under the head other sources, so we have assumed that the assessee is not doing the business of giving the machinery and building on hire. So let's say if I have a machine at my home which I'm not using it, it's just lying in my garage. I'm not using it. My my neighbor approaches me and he says, "Can I use this machine?" Let's say I gave you the example of generator when I was explaining this concept. Right, since let's say I have a generator which I'm not using. Earlier I used to use the generator, power generator, but since now I have the inverter at home, I'm just kept that generator in my garage. So one of my neighbors sees it and he says, "See, tomorrow I have my daughter's function at home, so I don't have a power backup, so can I use this for tomorrow's function in case the power goes off?" So I said, "Okay, use it, but give me 5,000." So what I've done is I've given the generator on a hire to him for 5,000. So that 5,000 income is taxable under the head other sources. But the condition says that I should not be into that business. And the answer is no. I'm a salaried employee in St. Joseph's. I'm not doing business of giving machinery on hire. It is just that opportunity came, so I gave. So this income is taxable under the head other sources. But if your business itself is doing giving the things on hire, then it will not come under the sources. Are you clear?
Yes, sir. Got it. Thank you.
Anybody else who has any question? So I'll quickly share this file with you people on your respective groups in MS Teams, and then probably again we have to meet today at 12, extra class. So in case if you're done, I mean, you can leave the meeting, since I think you already have one more class lined up after this, if I'm not wrong. So
Hello, sir.
yeah,
Sir, can you explain 5th point, sir,
okay, let me check.
of this sum?
Fifth says subletting. Yeah, fifth is subletting. So first you have to identify whenever you see the transaction subletting. Let me share the question with you. Others can leave if you have understood. So okay, so this is the question. It says he has taken a house on rent for rupees 10,000. So is this the income? The answer no. 10,000 is not the income. 10,000 is what he is paying to the original owner of the house, the landlord of the house. But after taking this house on rent, for which he is paying 10,000 per month to the original owner, the money which the original owner is receiving from this guy, 10,000 per month, for the original owner it is taxable under the head house property. So what this guy has done, after taking this house on rent, 40% of that house he has given it to his, let's assume, to his friend to stay, and from his friend he is getting 5,000 per month as what? Rental income. So this rental income from subletting of the house is taxable under the head other sources. That's what we have done here. First we have identified what is the income from subletting. The income from subletting is 60,000. Now in order to earn the 60,000, what are the expenses he has incurred? Note that expenses down. So he is also paying rent, because this guy is not the owner of this house. So he is also paying the rent. So what is the rent he is paying? 10,000. It's given here, 10,000. Next, he is also paying municipal tax for the entire house, 2,000. He is also bearing the repair expenses for the entire house, 5,000. So all these expenses should be deducted from the income what he has earned. Now when we are deducting expense, you have to keep in mind and you have to see whether he has given the entire house on subletting or whether he has given part of the house for subletting. If he has given the entire house for subletting, then you deduct all the expenses. But in case if he has given part of the house for subletting, then you identify what is the proportion of let off, and that same proportion you apply here for all the expenses. So as per the question, he has given 40% of the house for subletting. So all the expenses will be allowed in the proportion of 40%. That's what we have done here. All the expenses we have taken as a proportion of 40%. So when you deduct the income and the expenses, the net income from subletting is 9,200. Have you followed what I said?
Yes, sir. Thank you, sir.
Okay. Anybody else? Any questions? If you don't have any questions, then we will wind up today's class. Again, we have to meet at 12, so we'll meet at 12 with a new question.